Don't forget to record.
Yes, sir. Could not access specified channel stream key. We had this last time. What the fuck?
Is it like resetting the stream key?
Yeah. I don't remember. How do I get the new stream key? Here?
Right here. No, below. Copy.
Just hit copy.
Settings. Stream. Oh, I wonder we didn't save that profile last time. I bet it's the same stream key. We just didn't save it.
Yeah, it's streaming now.
Good morning, everyone. Welcome to Coffee with Carlson. Today is October, I've got it right here, 5th. Today's October the 5th. Weather is cool, sun is bright. Hope everyone enjoyed their weekend outside of the rain. We tried to spend a little bit of time. We spent some time in Orlando reading mask ordinances, and then we spent some time down in Port Charlotte with family. We had a really good time, nice relaxing weekend. Maybe we'll talk. We're going to be starting a new show with Dan and I, and we're going to film that sometime this week. We're still trying to talk about topics and figure out what to talk about. Most of the topics we think we want to talk about, we were just talking about before this show went on. So we'll see. Maybe you'll be interested, maybe you won't, but
I
we'll
think
give
we
it a
should
shot
start
later.
recording our breakfast conversations.
That'd not be a bad idea. We could just get takeout from D's and bring it here, and we could just eat here and talk while we're BSing. That could be like Barstool Sports. We end up super famous, right? So the show has gotten a lot of traction, and it seems to be helping people out, giving people tidbits of information. I'm trying to help. Like I said initially, we're switching over to this accounting type show, and I really want to try and give you information, you, the small business community, people thinking about small businesses, thinking about opening your own business, going out on your own, or people that have already done it. From the last couple of shows, I've had 2 or 3 meetings with some new clients. I always give a free half-hour consultation to new clients. You can book those appointments directly from my webpage at carlsonaccounting.com. There's an appointment. It says appointment or schedule at the top. I'm not really sure which one it is, but you can book from right there. Let me see if I can pull it up, and Dan can do a picture-in-picture real quick. Dan, you want to flip over to that real quick?
Yep.
So this is our webpage. And right here at the top is appointment. You can click right on it, and it'll take you to my calendar, and you can click initial consultation and continue, and it'll take you to my available appointment times, and you can pick those. Except for this Friday, I might block all of that out to go fishing. So if you want to come this Friday, you better book it quick. All right, so we'll switch back real quick. So what I want to talk about this week are a few of the topics that came up with these clients that I met with last week. And I think they're very relevant. I think it might help you out and give you a little bit of information. The first one I think is really important. A couple weeks ago, we talked about entity type and entity classification and how you're going to set up your business. And this particular business is set up as an LLC. Single owner LLCs default to, that was a quick plug for Strangely Warm Coffee. LLCs default to sole proprietorship. So we're just going to talk about sole proprietorship world for a second. And one of the questions that they asked me was, is it okay that we are running our, I asked them, have you set up a business checking account yet for this widget manufacturer A? And they said, yes, we did. And then they said, is it okay if we utilize our business checking account for personal expenses? And I said, there's nothing illegal about that, but there's lots of pitfalls with doing that. Some obvious pitfalls with mixing it. The first one is that, and I didn't make a list. That probably would have been a good idea, right? The first set of pitfalls that I can think of is that if I'm running all of my business and personal expenses through my business checking account, then I don't really have an idea of how my business is doing, because when I look at the bank statement, there's a jumble of expenses there that range from buying materials or supplies for the shop for my customers that I'm working on, or groceries or the movies or dining out, things of that nature. So I want to really keep a clean set of books so that when you come to your accountant at tax time, or when it comes to tax time, or if you use someone like us on a monthly basis, we're not sifting through pages and pages of personal debit card transactions to try and figure out those things that were set specifically for the business and legitimate expenses for the business. So that's a really good reason. You don't want to mix those things up just so that you can classify them better and know where you stand. I don't recommend utilizing the balance in your checking account to know where your business stands, but if it's constantly running low, maybe it's because you're running all these personal expenses through there. So in order to get a good clean set of books, keep the two accounts separate. Another good reason to do this is if you ever were to get audited by the state, sales tax audits are fairly regular, about every 3 years for someone with a sales tax ID. So you could potentially get audited from the Florida Department of Revenue, or you could potentially someday get audited by the Internal Revenue Service. If either of those two things happen and they will ask for copies of your bank statements and copies of your general ledger and financial statements and tax returns and other things, if they ask for copies of that and an auditor sits down with a bank statement that's 6 pages long and they're trying to go through each one of these expenses and they want to tie those things back to your tax return, you really don't want to have to explain items on your bank statement that are unrelated to the business. That could do a couple of things to you. It could cause that auditing agency to question the legitimacy of legitimate business expenses on there. For instance, if you buy office supplies at Walmart, but you also buy groceries at Walmart, those two things could be confusing and you want to make sure they're separate. There's no reason for you to go into the explanation of, well, this Walmart expense, and chances are you won't have the receipt. If you said this Walmart bill for $150 for office supplies, but the next day I spent $250 and that was groceries, that's going to lead to more questions and you're going to have to provide more documentation and proof that shows that those are business expenses. The other thing it might do is if you're mixing the two personal and business expenses, it could open up they could potentially see something in your personal expenses that could open up other areas for audit. So I haven't seen that, but we always try to run on an air of caution to make sure that you're going to get the best resolution you can if something like that occurs. And with the Department of Revenue, it's pretty regular. So we've gone through some fairly extensive Department of Revenue sales tax audits, and the least amount of information I can give them, the better off you're going to be, and the less information you're going to have to explain to them. So those are a few of the really big reasons. Another one is a security issue. So if I use my business debit card for purchases online, purchases at gas stations, and things like this happen regularly. It might not have happened to you, but my son, who lives in Tampa after he graduated from college, he had his credit card skimmed at 2 different gas stations in the same month and is on his 3rd replacement card because of it. So you want to be very careful, but I don't recommend using a debit card for any of those transactions. I don't use the debit card for online purchases. This is a whole different discussion, but debit card for online purchases, for store purchases, certainly gas station purchases, that just opens you up to additional losses that you might incur if someone does skim your card information. Always use a credit card for that. But utilizing it for that, it could give them access to your business or your personal. If you're mixing it all into a business account and you're buying things that are higher risk for personal reasons with your debit card, they could wipe out your business checking account. A thief could. So keep those things separate. Always a good idea. Always set up 2 bank accounts. If you're in the sole proprietorship world, it's probably best to set some sort of a schedule where every week or once a month you just sweep money from the business account over to your personal account so that you can pay your personal bills out of it, which also helps you with personal budgeting so that you can keep track of how much did I spend on groceries, dining out, movies, mortgage, electricity, those sorts of things. So you want to keep those separate as well for that reason, so that you can look at both sets of books good. And if you keep track of those somewhere electronically like I do, then it makes it a little bit easier to split them out and sort them. So that's bank account 101. Always set up a separate checking account for the business that you're operating under. Pay all your business income, all your business expenses out of that checking account, and deposit all your business income into that checking account. And if you need to move money into your personal account, pay personal bills, just transfer that money over. If your accounts are at the same bank, that process is fairly quick and easy, and it's done instantaneously, so you don't have any issues there. I haven't made any jokes this morning, so Dan hasn't had the opportunity to hit any of our funny stuff. I guess that's kind of a joke in and of itself. Perfect timing. So the next topic that came up in this particular client meeting, when we were talking about bank accounts, we were talking about income recognition. How do I report my income? So businesses today collect income from lots of different sources. You could get it from PayPal, Facebook Marketplace, Square, credit card processing through your bank, checks, cash. There's Venmo. There's all kinds of ways to transfer money back and forth and pay people in their business now. Cash is the one that we were talking about because the question was, should I be recording? What should I do with the cash that I receive from customers? Some customers like to pay cash. Dan says spend it. Of course you should spend it if you need it, but you don't have to spend it as cash. So what do I do when I receive cash from a customer and I have for a small business that I'm operating? My answer will always be record that cash, deposit it into the bank, make sure it gets recorded on your financial statements and your tax return. This might be counter to the advice that you get from your friends, relatives, buddy down the street, or even competitors or people that you work for when they tell you you get it. But there's lots of pitfalls that you can run into with not recording cash as well. The first one would be in the scenario I talked about earlier. If you were to get audited by the Department of Revenue, and they're looking for sales tax revenue, right? So they're going to try and find revenue for themselves whenever they can. If you show them a bank statement that says that you've never received any cash, that might create some questions for them and cause them to test more of your sales invoices. So they want to see how you were paid. A lot of people, especially people that are vendors that are working outside of their office, they might have a ticket that they hand to the customer that says paid. They might have something that's a duplicate. But the Department of Revenue might want to see those sales invoices as well, whatever you gave to the customer when you provided the service to them. So if you show no deposits of cash on your bank statement, even though cash is less and less, we don't receive too much in my office anymore, that could raise a red flag with the Department of Revenue or the Internal Revenue Service, because they probably have some standards through their previous audits of how much generally people across the country are receiving in cash versus credit cards and checks. But there's bigger issues than that, because the risk of audit from the Department of Revenue is not low, but it's not real high. But from the IRS is very low. But the biggest pitfalls you're going to run into are trying to borrow money. Well, first let's talk about generally knowing how well your business is doing. So if you're only recording checks and credit cards in your financial statements for your business, your profit and loss statement that shows the total income and total expenses of that business, and your cash receipts are 10%, then overall your income looks like it's 10% lower. So you're never really going to get a real picture of how well your business is doing or how profitable it is. So just from general managing your day-to-day planning and budgeting for operating the business, you're not going to be able to do that if you're not accurately reporting it to yourself. In your head, you might think, well, I got $1,000 last week from this customer that I provided a service for, but it's still not recorded in your books. If you do record it in your books and you separate it out for taxes, that could get you in a different set of troubles. But you want to make sure that you record it so that you in running your business have an accurate picture of how well you're doing, both from an income standpoint and an expense standpoint. Because if you kept the cash in your pocket and then you started using it for business expenses, you're probably not going to save the receipts for the expense side of that either. I had someone recently tell me that a previous accountant told them that if someone pays you $1,000 cash for a job, put the cash in your pocket and don't report it, but make sure that you pay for the materials that you used for the job with the cash that you just got. And I guess that kind of makes sense because I'm not reporting the income, so I shouldn't report the expense. But they said they were told to report the expense. Certainly not something you want to do. So accurate picture for yourself and planning is a good reason to report all the income that you receive from your business. The next reason is if you ever need to sell that business. So you're ready to retire, or you have to move, or whatever happens in your life that requires you to sell that business to other people and you want to start marketing it to the public, or even if you have an interested buyer, the first thing they're going to want to look at are your financial statements and your tax returns to make sure. What we want to make sure as accountants is that those two things tie together. It means that they're theoretically accurately reporting income and expenses in both places. If those two things don't match, then you need to figure out why. Typically, they won't match because of the cash. So then what the buyer would ask the seller is, why don't they match? The seller is going to say, well, last year I collected $20,000 in cash, and the year before that I collected $15,000 in cash. If I'm representing you as the buyer, I'm going to tell you to back away from that buy and don't buy that business because you have no way to prove that. He or she has no way to prove that. So there's nothing you can do that's going to verify the purchase price if it's based off that gross figure, and they're including cash sales that they never reported. So I would shy away from that. And if they're not accurately reporting the income side, chances are they're not accurately reporting the cost of goods sold or the expense side either. So there's probably going to be some more holes in those financial statements somewhere. As a seller, you're not going to be able to get maximum value for the business that you've worked so hard to grow because you're not going to be able to prove to the buyer what your real sales figures were. And a lot of people base purchase price off of your gross sales. So if you can't prove that, you're going to hurt yourself in the long run by not being able to sell it for a good price sometime in the future. And that's going to hurt you. The final way that I think, and there might be some others, if there are, please put them in the comments if you've ever had an experience like this. But the other way that I've seen this hurt people is you get to a point in your business where you want to expand and you go to the bank and you present financial statements and tax returns, which are the same things the government's going to ask or a buyer's going to ask for. And the bank's going to look at those. They're going to base your ability to pay that loan back off of those numbers on your tax return. You can't tell the bank, well, yeah, my net income from my business last year was $50,000, but I got $20,000 in cash that's not included in there. The bank's not going to care. So if you want to expand your business, buy some equipment, buy a new building, buy some property, whatever it is you need to do to grow your business and borrow those funds, you're going to hurt yourself really, really badly in that scenario. I've actually had customers in the past that came to me because they were new customers of mine. They came to me and said they were having a problem with the bank lending, and they actually said they didn't report all the income that they collected and asked me what to do. And I told them you need to amend those returns, pay the tax, make it right, and moving forward, make sure this is right all the time so that you're not hurt in the future with either of those scenarios, selling the business or trying to borrow money. And again, if you're signing a tax return that has where you're not reporting all of the income that you reported, technically that's a fraudulent tax return. So you could be, depending on the numbers, you could be potentially charged with fraud someday by the Internal Revenue Service if they were to catch you. So those are some big pitfalls to checking account, how to manage your cash flow in your business between your business and personal expenses, and some reasons why you should always report the cash that you receive from your customers as income. And I hope that provided a little bit of great information. I want to briefly touch on one other thing that we talked about in this meeting. Well, you know what? I think maybe I'll talk about that in another show. The next show, I think I'm going to talk about vehicle expenses, travel, and maybe meals and entertainment. That's going to be the next show topic. I don't have enough time here, and I don't want to bore you any more than I already have. That's shout out to my cousin Scott, who is a firefighter out in Arizona, and he says I'm boring now. So I hope that provided a little bit of information. If you need anything else, give us a call, 863-382-4141, or check me out at carlsonaccounting.com, where, like you can see, schedule an appointment with me anytime, and we can help you out and give you consultation and hopefully work with you and hopefully help you grow, maintain, or expand your business. I appreciate you coming with me this morning on this wonderful journey through accounting and tax land. It's been exciting for me. I hope it's been exciting for you. Thank you again for joining me with Coffee with Carlson. This is Jeff Carlson saying goodbye and God bless.